Ladies and gentlemen, good day and welcome to Mech Projects Limited Q2 FY2024 earnings conference call hosted by Nirmal Bang, Institutional Equities Private Limited. As a reminder, all participant lines will be in the listen-only mode and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being now recorded. I now hand the conference over to Mr. Prashil Gandhi from Nirmal Bang Equities for the opening remarks.
Thank you, Rohit, and good afternoon to all participants. Nirmal Bang Institutional Equities welcomes you all to 2Q FY24 earnings conference call for Mech Projects Limited. From the management team today, we have S.K. Ramaiah sir, Director Business Development, and Jamie Satish sir, CFO. I now hand over the call to management for opening remarks, post which we can take Q&A from the participants. Thank you, and over to you, sir.
Yeah, thank you, Prashil. Hi all, this is Satish. Good afternoon and best wishes to all. Hope you all had good Diwali. I have with me Mr. S.K. Ramaiah, Director Business Development, and CFO, GM Finance. Mech had one more great quarter with good set of numbers and execution. There is no change in overall plan set for Mech. Execution and ongoing business plan is in line with our projections and internal set targets. We are happy to see more and more opportunities coming in our core sector or projects, a combination of new and old plants getting revived. Moreover, we are also too excited to see plenty of opportunities coming in the operation and maintenance, both in the domestic as well as international market. This year we will see a large order book addition coming from O&M space from various projects in pipeline which are in advanced stage, and orders from O&M during the year going to be halted by in the journey of 24 years. For Mech, we are seeing quarterly execution bandwidth going up quarter on quarter. Going forward, we'll see the numbers going up significantly. In any financial year for Mech, execution during quarter 3 and quarter 4 contributes substantially higher as compared to quarter 1 and quarter 2. Therefore, we'll see quarterly execution cycle improving significantly for the rest of quarter of financial year 2024. Coming to quarter 2 and H1 numbers, the reported total income for quarter 2 FY24 is rupees 937 crores, and EBITDA is 118 crores, and PAT is rupees 51 crores. In quarter 2 of last financial year, the reported total income was 124 crores, and EBITDA was 89.5 crores, and PAT was 44 crores. So on a quarter-to-quarter basis, Mech has demonstrated almost like 31% growth of the top line, and growth of top line has gone up almost by 52%, and PAT has gone by 17%. The revenue for quarter 2 FY24 is as follows. Mechanical business has contributed 148 crores. Civil business, including railway, water distribution, 496 crores. O&M 272 crores, and electrical business close to 20 crores, and others close to 5 crores. Whereas during last year FY23 quarter 2, the contribution from erection business was 161 crores, civil 367 crores, and O&M it was 226 crores, and electrical 17 crores, others was 3 crores. O&M and civil has shown a growth of almost like 20% and 50% respectively. Section more or less remains flat, but however, this number again will go up significantly going forward. Electrical, consciously, we are not looking for new projects, therefore it's more or less flat. Coming to the for each one of FY24, the total income was close to 1,808 crores. The EBITDA is 223 crores and PAT is almost 102 crores. Whereas last year, each one, the total income was 1,523 crores, EBITDA was 125 crores, and PAT was 83 crores. The growth of almost like 19% for H1 compared to last year. And with the growth of the top line, EBITDA has significantly gone up by almost 27% and PAT has gone up by almost 53%. Similarly, O&M and civil business has gone up by 13% and 33% respectively. Mechanical has a dip of 8%, but however it will continue to grow quarter 4, and electrical business is coming down because not much order booking is happening on the electrical business. This year we'll see significant contribution coming from the water business because the order book is quite healthy. O&M continues to be the backbone of the company, contributing almost like 27 to 28%, and during the end it will continue more or less 10%. FY24, because of the healthy order book, water business will continue to contribute close to 25% of the total business, and O&M will continue to be 25% plus, and mechanical will continue, both domestic and maintenance will contribute almost like 18% plus, and railway is again picking up with setting up the metro. This year it is expected to be almost like 4%. And we'll see that FY25, FY26, there will be significant change in the business mix because water, because of healthy order book, contribution is going to be almost like 80% next 1.5 years. And erection business is expected to go up almost to 26%. And railway is expected to go up to 7%. And NGO, this year will start with a small number and it's expected to go up significantly next 2 years. FY25 is expected to be almost like 8% and FY26 is going to be almost like 16%. So there will be significant change in the business mix because of the O&M pie and FPO business. Improvement is also seen in overall margin profile, and same is further expected to improve gradually, and on reaching MDO to peak during FY26, the margin profile will improve to a greater extent. Depreciation cost percentage remained lower side due on account of controlled capital spending, and the finance cost side interest on tax impact as a percentage to revenue remained lower side and continued to control on account of improved working capital and cash flow. As you all know, with respect to such operations conducted by the Income Tax Department under Section 132 of the Income Tax Act 1961 during July 2022, based on the deliberations with the assessing officer and as a prudent measure and to avoid any further litigations, the company has made a provision of 2 crores for the assessment year 18 and 19. The company has made all the required information available to the department so far. With better deployment of capital, improvement in margins, we have also seen improvement in ROC, and this is expected to again go up significantly. As stated in our earlier calls too, The overall execution bandwidth is increasing quarter-on-quarter on account of various initiatives and strong increase in in-house resources. The company is well set to execute projects now in the range of 200 crores to 1,800 crores per quarter. And other developments include the operating cash flow for the period is almost positive by 70 crores, and the system generated free cash flow of almost 50 crores plus during the period, which is quite healthy. We are working on the same to improve further. Also, the average monthly collection of the company continues to be healthy. More importantly, the net current days, excluding cash and cash equivalents, have substantially improved on account of improved working capital cycle, change in business mix, and change in customer concentration. Net current days have come down to in the range of 130 to 130 days, and on stabilization of the MSO business from FY25 and 26 onwards, we can expect significant improvement in net working capital days. This can help the system generate larger operating and free cash flow. You can see constant jump in free cash flow. Importantly, gross debt and net debt remained controlled despite growth in business and order book. As on 30th September 2023, the gross debt is close to 450 crores and the net debt stands at 226 crores. But if we see as of today, we can proudly say that Mech is a net debt-free company. And the debt-equity ratio as on 30th September stands at 0.3, which has significantly come down because of the improvement in the cash flow. But if you see net debt today is nil because the net debt is almost zero. Coming to these two MSO projects, a lot of developments and ground activities are happening. The first project, Basanpur. The stage 1 forest clearance we got in November. The government we got in November. Environmental clearance also we have got it. Now the project is ready to start now because FC and FC the major milestones which we achieved now. And we have applied for the consent to this is expected to be next 1 month, so that we can start the ground activity from itself. And coming to the second project, initial site establishment of mining activities already completed by October. And more important is the heavy equipment, which are very important to start the excavation. We have started the procurement and transporting equipment, and these equipment are expected to reach the site maybe next 1 week, 10 days. And the core drilling activities already started during start of November. And the EP consultant, Ms. Vardhan Environment, we have finalized for the washery. Apart from that, the electrical connection, for 1.46 MB allotment along with the demand note received for JVV null during October. R&R colony fencing work already started. Apart from that, the mining area fencing work already started. So we are expecting next 1 week the Bhumi Puja, that was, we can start the excavation work during end of this month itself. Therefore, we would see the revenue picking up of the financial year itself. Coming to the order book, order backlog as on 30th September is around 53,100 crores with the MBOs. Excluding the MBOs, the backlog is almost 13,400 crores. Similarly, the order book backlog as on today is around 56,500 crores with both the MBOs, and excluding the MBO, it stands at 13,700 crores. For the entire year, by 2023-24, the company has set a target of 10,000 crores and we keep the target as it is. We are confident of reaching this number, including the orders which we have received up to date 1,800 crores, which are in pipeline and in advanced status close to 1,800 crores. We have identified opportunity size of around 56,000 crores plus. We are also expecting good amount of order booking and execution cycle at international market too. During FY24, large order is expected from the power sector, O&M, mechanical and civil construction. As we stated earlier, the focus will continue to be going forward consolidation and leveraging the growth, and the focus will continue on industrial plants, operation and maintenance, railway and metro, water, to some extent roads, and MPO projects. The execution cycle between FY24, 25 and 26 is going to be robust and healthy on account of improved order book backlog and targeted project pipeline and more importantly, increased bandwidth the execution cycle per quarter. The projected margin profile has been improving and expected to improve further gradually year on year. Our plan to build business model to have a recurring long-term service model income to the tune of 3,000 to 3,500 crores plus in combination of O&M plus MBO for sustainable long-term growth from FY26 is possible. This model will help us in a bigger way to improve margin profile, working capital cycle, and in a large extent improve the cash flow. Mech is well set to demonstrate execution and conversion in the range of 34 to 55% of its opening order book in a year. In addition to that, revenue from MBO business as per ramping of coking coal product plan. Going forward, O&M and MBO business will drive substantial growth in a significant way. And we have some more developments on the business side. I'll request Mr. Ramay to add this.
Thanks everybody. Good afternoon. Thanks for remarks on the various numbers out. Yeah, as Satish has said, the outlook continues to be bright because the trigger for that is active investments the government sector is spending in all the areas, energy sector, infrastructure, and then the drinking water schemes, water systems, and railways, and the metros. I think that is what is going to, the company is going to align with this business. And of course, O&M, there is a lot of revival it's in. And as for the numbers are there, what Satish has pointed out, the segment-wise numbers of the ETC and mechanical portion, the project backlog is about 7,050 crores compared to 6,878 crores at the beginning of the year. The civil component of the work is 6,074 crores against 6,156 crores. The O&M is 353 crores versus 600 crores. That's where to add certain numbers to sum up now. Then electrical is 255 crores, 6,080 crores. The MDO is a major component of our business with about 39,700 of backlog with both the MDOs. That should take us to a very healthy backlog. The near term, 3 years, or the long term, say 25 years. Looking at the MDO side, it is 3,111 crores as on September end, as on today, it is 3,500. Now, when we look at the opportunities, what we can see is that there seems to be a substantial revival of the power sector market. This is mainly driven by the apprehension of the load mismatch which may happen in a couple of years between the coal side power generation and the non-coal side, that is the renewable power. The present renewable capacity is about 1,25,000 megawatts. And the total installed base of 4,11,000 megawatts and all. There is going to be further augmentation of the renewable power as the years go by, and that's why government has taken some remedial actions in terms of fast-tracking the investment in new projects. And the present indications are that apart from the NTPC, which is planned, which is already ordered LARA, DHL, and other projects are going to be in pipeline like Keeper, Viripalli, Ingrodi, Maija, Ramgundam, Patratu also. Then the GenCos, the generation companies, they are having a plan of about 10,500 megawatts. That is going to substantially come up. Recently, government has approved the Yamunanagar project also. And looking at these projects, the expected capacity addition which will come up in the next couple of years should be about 23,300 megawatts. These are all the new projects, what I'm trying to say. And then there is a revival of the projects about the first tranche of the projects, 5,270 megawatts, has already been taken action at many of the projects. And we have already taken some initiative with taking the orders there in with Vedanta and also with Manatis Park. Now, the government has asked recently, a policy initiative has been directed to the Power Ministry, saying that another 5,500 megawatts of stuck projects that also has to be revived, and it has prodded the state government undertakings also to participate in these projects. So that it is revived. Therefore, the revival of nearly 10,000 plus megawatts, new addition of 23,000 megawatts, that should give a very good outlook for the power sector growth. And in terms of our business is quite aligned with that in terms of the main plant installation work, production system commissioning, the O&M jobs and all. Therefore, that is one aspect on the new units and also the revival of the old units at about 10,000 megawatts. And the O&M opportunities has triggered substantially. Recently, has two major jobs. We have taken Hindustan very comprehensive O&M about 429 crores, 6 years O&M contract. It's a very important breakthrough in a mining and metal sector, non-power sector. We have taken it. And then Raichur going to 16 megawatt, 160 crores. And then Adani at Mundra, we have taken about 100 crores of jobs for various O&M packages. Now, the opportunities which we are tracking in terms of the new plants which are coming up, it is Pisa 2 into 660 megawatt, Gatpur 3 into 660 megawatt, North Chennai possibly 1 into 800 megawatt, and then Buxar, of course, as the commissioning comes near to that. Then there is a major project in Balco with Vedanta Group, that also we are having a look at it. Therefore, all these opportunities, the ballpark figure of opportunities in terms of the GTG installation, as the civil and CHP, which is our core strength, because coal handling also, material handling also is one of our core strengths we established. It comes to about 10,000 crores opportunities with these two projects coming up. Then the revival of the old projects also, it can add up to another 4,000 crores. Now it can be anywhere reached between 17 to 20,000 crores of opportunities, both with the addition of the new capacities and also the revival of the old projects where half-completed jobs have to be taken up. And there, the execution, the fast-track execution is there, and the government is prepared a big picture of that, as we have seen in the case of the Singapore job. And recently we have since one more major order with DHL for the constant 4 crores, the main part equipment associated work and the civil work also. Therefore, with this type of initiative, this will continue to play in the coming months and coming quarters also. Now, coming to the other water-related projects, we have substantially identified huge opportunities, particularly in the Madhya Pradesh, then in Karnataka, Tamil Nadu, then Madhya Pradesh also. Therefore, with all these projects, the total opportunity is about 18,000 crores. And Madhya Pradesh itself is planning about 9,000 crores in various drinking water, AMRUT schemes, urban water requirements, various towns and cities, sewage treatment plants, etc. And with our fast-track execution expertise, what we have done in UP, the drinking water schemes, perhaps we are well qualified for many of these jobs, and then wherever it's required, we can have a tie-up with the other parties also, like micro irrigation, district irrigation, and those type of schemes also are coming in a big way. And that should help us. The various segments of these water systems are the sewage treatment plants, renewal schemes on the AMRUT scheme, then water supply schemes, lift irrigation schemes, canal works, and then, of course, the most important is Jal Jeevan Mission, which is a flagship initiative of the Government of India. It is heartening to know that almost 70% of the rural villages are well connected now. And we are doing pretty well in the what we are doing at drinking water schemes in UP for about 4 major areas, nearly about 2,800 crores, 150 to 800 crores. And almost 30-35% of the work we have completed. Well, that gives us a lot of reference space and expertise, because the type of organization what we established there is a distributed organization system. That means down the line, a grassroots level distribution organization system, village level, the area level, then the block level, the district level, and the zone level. Therefore, it is well structured organization. Nearly about 4,000 people are working, and already about 100 villages we have completed the 100% water supply schemes, and then water is flowing into those villages, and the people are seeing the benefits. And what is more important is the organization what we established, about 4,000 people with engineers, supervisors, and all the working staff, administrative staff. That should give us a strong base in undertaking many of the important water projects, drinking water projects, also. Then one more thing, important thing that has come recently is that as we summed up these contract agreements with the Jal Jeevan Mission scheme with the UP government, finally it has been, the numbers are out in terms of the operation and maintenance of the work. Earlier, it was only a general feature involved in the LOI, but now they summed up those figures in terms of operation maintenance, because as we complete the execution of these projects village-wise, it is estimated 3% of the capital cost will come for the going time for the 10 years execution provision, and the present estimation is that the numbers have been given by the UP government are about 681 crores, and this we have not considered in our order book so far, and that will get figured out now. And of course, another 3 to 6 months we started opening up the going time also once more and more villages come on the front line. Now, this is on the drinking water and water systems, and then of course the railway scene, we have seen the experience what we are gaining in Bangalore at Telangana of 57 crores, and then we are doing about 14 railway projects, about 1,500 crores, apart from including the DMRC job, and that is giving us, and recently we have taken some jobs from the railways, and then Raebareli we have taken an infrastructure facility for the Vande Bharat infrastructure facility, and then we are working with Mumbai also. We have taken Uddhav Bridge some jobs also. So these opportunities will coming, and the railways and then metro together, offers huge opportunities in terms of railway infrastructure, in maintenance depots, workshops, repair shops, and then this one, revamping of the stations and all those things. And that also a good feature is that now the organization is in place to execute these jobs. I think that is one of the features of Mech. We are focused building up the organization capacity in wherever we are diversified, and we want to sustain those type of organizations for long-term growth and all. And of course, wherever there are viable projects are there in the railway, in the road sector also, we will do it. For example, the Telangana job, what we have taken from Bhagani as a EPC job, we almost completed 70%. That is a very fast, what we can say we have. And then other two projects also, we have done nearly 50% of the job in Mizoram and then Karnataka also. So this background of these road projects, the railway projects give us good background. And then the new initiative is going to come up in West Africa and Nigeria, Ghana, Tanzania, and other places apart from the Middle East. There are some new projects that are expected to come about 45,000 megawatts in the Middle East, Saudi Arabia, then UAE and all. And already we have got an organization there. About as on today, 1,600 people are working in the Middle East and then West Africa and all. That organization setup also will continue to help us to see that the new jobs we can take it and implement it also. Therefore, as Satish has rightly said, there is a substantial opportunity in the market as part of the national infrastructure pipeline. It's in the first year of implementation, third of the implementation of another 1 lakh crore. And many of the organizations in practice they are benefited, including us. And we have been greatly benefited by this investment from the government side. And then private sector investment also will come up in the steel sector, then mining sector, in the coal side. And then Coal India is coming with first time connectivity around the markets with investment of 50,000 crores. Therefore, there are plenty of opportunities. We have to select the right technology, right partnership wherever is required for the association where we don't have that in some of the new areas. And then the implementation mechanism has to be stabilized with the learning what we have achieved it. And one of the features I can mention is that why our margins can improve further is the learning we are undergoing it. And without much addition in the capacity and the manpower and also the equipment base what we are having, the turnover is continuously growing up year after year. That is a good feature for operations. And with that, better margins can be driven down the line. And then with more opportunities coming, perhaps we'll also get better margins in the market. So this is what I have to say. We can go for the questions and answers.
Yeah. Prashil, thanks for giving the opportunity. We can move forward to the Q&A.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touch-tone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking the question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Shadas Pari from Equitatis Investment. Please go ahead.
Thank you for the opportunity. My first question is related to the tax provision that you mentioned. If you could just repeat the number, what is the provision that you've taken because of the search?
Yeah, we have provided for almost 6 crores, madam, including some of the component on this tax. So there is 6 crores we have provided for.
Okay, and this is good provision, right? You wouldn't anticipate any further provision because of this going ahead.
Yeah, see, what they've done is they completed for some of the assessment years. So we don't expect a bigger amount to come. Okay, maybe next 2 quarters we'll see that this 100% this issue gets resolved. Therefore, the provision may remain more or less slightly lesser than what we provided for. However, having said that, we have got almost like refund of 40%. So in terms of cash flow, there is no impact. But however, it will have some impact in terms of the provision part.
Understood. And in terms of O&M, so we've almost done 500 crores of revenue in the first half. Just wanted to know what is the target that we have for this year? What kind of growth are we anticipating to FY2023 O&M?
O&M, this probably will be touching close to 1150 to 1180 crores. That's the target. Only this will continue to remain almost 25 to 25.5% of the business this year.
Okay, understood. And what would be our monthly collection run rate right now?
This is picking up. It's almost like it's ranging now 350 to 400 crores. And see, normally like quarter 1 and quarter 2, historically it's like 35% to 35% business. But over quarter 3, quarter 4, there will be a significant quantum jump. So we're expecting this number to pick up from probably quarter 3 December onwards. And I'm seeing that this number should cross 400, 450 crores gradually.
Okay, understood. And so, we had about 3,000 crore plus orders from water segment. So just wanted to know what is the execution guidance in terms of FY2024 for water projects?
For water projects?
Yeah.
Yeah. If water, this will play significant pie this year because the order book is significant. Maybe if all goes well, FY2024 we are expecting close to 900 crores. That is the number at lower side, and it may go up to 1,000, 1,050 at the higher side.
Okay, all right. Okay. And our interest cost for this quarter has gone up significantly. Is this because of bank guarantees or something, because the debt numbers haven't grown into this?
Honestly speaking, the finance cost remains controlled. As stated, like there is some impact of interest cost connected to IT. So the provision of some portion of the interest. So because of that, there is an increase of almost 3 up to 4 crores. Otherwise, you expect that the finance cost remains flat. Yeah, it's not a recurring income. It's like almost one time. So water maybe will close this year, but there's no ambiguities carried on this front. Okay, so you'll see that this number coming down because it will see that this today is almost like 3. I don't see this number to shoot up.
Okay, understood. Thank you so much.
Thank you. Participants who wish to ask questions may press star and 1 to ask questions. The next question is from the line of Arun Subramaniam from Ampersand. Please go ahead.
Hi, sir. So my question is that what kind of order inflow that you are targeting non-MDO in this current financial year?
We have kept a target of almost like 10,000 crores. We are not changing the target. So we be close to 1,800 crores of addition up to date. On top of that, the projects which are L1, it's almost like 1,800 crores plus. And we are expecting good amount of additions coming from the power plant, both in the O&M, civil, also the mechanical pie. This together we are expecting close to 4,500 crores. Therefore, we'll have a combination of orders coming from power plant, okay, both the old and new plants. And O&M this year will be across 2,500 to 3,000 crores of addition. And on top of that, we are also targeting close to 1,500 crores of projects related to water. Apart from that, if all goes well, railway and metro, we may add close to 200 to 250 crores. And other civil and international together, we're planning 2,000 crores.
What would have been the reason for the first half order inflow being a little slow, and what will really change going
The first half, like, we were working more towards this domestic side, mostly the power sector and some of the railway apart from the road projects. Okay. Of course, the O&M, it's been almost like finalized stage. Okay. But however, in terms of awarding, it took slightly longer time. Apart from that, some of the state selection code and all. Okay. Some spillover maybe there probably in during December and all. Okay. So more importantly, what is important that the negotiation part, okay, it's almost done now. Okay, we could see that conversion happening next 30-35 days. So maybe December and January will see huge number coming in. And apart from that, other projects, we have seen that the tenders getting postponed a couple of times. Okay, of course, this is close to 800 to 950 crores what we were expecting. And in Chennai, there was slow in terms of discussions and negotiation. Now that we've already completed. It took slightly longer time, but of course the order conversion started happening. Apart from that, we're also talking some of the O&M projects with Vedanta and BHL also. Probably we'll see that normally historically, if you see like the conversions stuff, okay, historically less, the second half is more. Even in terms of execution or the order inflow also.
Yeah, I think what Satish says is right. So what is happening also, of course, these elections, these elections, most of these countries are out, that's where our confidence comes from the point that, there are identified projects are there, then bringing water, power, railways, and then roads also. Then infrastructure also is there. Therefore, the opportunity size is substantial as the inquiries are coming. There is no doubt of inquiry. It's a question of selecting the right combination of these products, project, execution, and our there. And then, saying that, we select the correct project and also for execution. And that is one of the things, perhaps, the first half is always because of rainy season and then many of the clearances and issues, they may take more time to firm up all those things. And in case drinking water and water has happened, this is the last phase of the ordering. Perhaps they have to do last quarter maybe also. Therefore, they are now trying to complete that exercise. That is where, there are 80,000 crores of opportunities. The new power projects, because Lara has been awarded, there was a delay in awarding it also. Now it will come up. Also is already, they have taken action and all. Now the revival of the projects, what has happened in Asarna, we have seen the benefits of that and more of there in this also. And the second phase of the revival of the old projects, another 5,010 megawatt, once capital, more opportunities. Maybe a little bit of adjustment there in time lag and all. But overall opportunity-wise, there is no dearth of it in the domestic market. Actually, we are very bullish on that in all these segments and all. And railways, in fact, if you look at the part of projects, what they are doing and the metro projects, what we have taken, there are also a lot of huge opportunities are there. And we are ready to get many of those. And the usual time once it happens, we will be able to go in more way.
You can just follow out that out of the order backlog. Are there any slow-moving projects like which are slower than your anticipation and if at all things are improving on that front?
Sir, can you repeat something?
Yeah, sorry, there was a lot of disturbance.
Yeah, some disturbance.
So I just want to know that of the order backlog that you have, will you like to call out any slow-moving projects which are like getting little delayed compared to what you had thought of, including the one which you had received, big one that you had received received last year? Is there any slow-moving project and is that going to be improving sometime soon?
No, there are no projects which are old, okay, or suspended. It's all our ongoing projects. Okay, the plan is in place. Of course, there was some scheduled changes in terms of the ordering and all, but there is no change in the plan.
Thanks a lot, sir.
Yeah, thank you, sir.
Thank you. A reminder to participants that you may press star and one to ask questions. The next question is from the line of Prashil Gandhi from Nirmal Bang Institutional Equities. Please go ahead.
Hi, sir. Thank you for the opportunity. A couple of questions from my end. First, could you update us on the status of our FGD order and the potential revenue booking that will take place over next few quarters?
Yeah, madam. The initial things for issues regarding the layouts and engineering different types are required in that more firmly. And now the engineering orders are placed, and then there is going to be a tracking on that. One of the projects, 25 megawatt, we are taking action on that, and that should be around roughly around 800 crores. That would shape now on the priority basis, and then the other also should follow. So the FGD, if you look closely, what is happening is that the major in that for process implementation is putting the system into the liquid stage, and the technology selection and the picking of that. And as on today, 10,000 megawatts, 10,000 megawatts are in the capacity addition of the FGD side. 69,000 megawatts identified. But ordering has been about 1,10,000. Before in most of the things, there is a general amount of little bit lag is initially because of the finalization engineering, layout issues and all. And of course, there are other side also, there can be some issues related to the tariff also, those things that we see, discounts and electricity also. That is where, the government is also little bit giving the leeway for them to implement it, but they are very firm on that. Now, for all the projects, the latest update is that government has extended it to 2027. That is a overall entry requirement. But where the ordering has been done, the usual contractual schedules will be there, barring the issues related to engineering fit-ups, and then the layout issues finalized, all the availability and those things.
Yeah. So, all in terms of revenue looking something like FY2024, maybe quarter 2, quarter 3, quarter 4. Okay, quarter 3 we may expect 50 to 100 crores. Maybe quarter 4 it may go up to 250 to 300 crores. And FY25 maybe the range of 1,000 to 1,200 crores. But it may go up slightly another 200 to 250 crores. Okay. This is the plan what we have got now. We will have more updates. Probably quarter 3 will take end of the beginning of quarter 4. We'll see scheduling part and if something can be improved in FY25.
Sure, sir. Sir, secondly, on your margins, we have seen your margins jump significantly by 90 basis on a YOY basis. So, would we expect first, what would be the reasons for the same? And would we expect some further margin improvement? What do you think is the sustainable margins going ahead? Is it a 13% or a 14% kind of margins?
See, we had the first plan is to see that the old project mix comes down. So therefore, our cost towards the royalty, which is impacting straight into our EBITDA margin, that should come down, and it is happening. So there is a natural mix change because of building the issues in-house directly. So to some extent and to a larger extent, that is helping us to push the margins. So the first plan is to get back to our normal historical margins, which we used to report at 13.5%. And that is quite possible by 2026, okay. And we can stabilize it by FY26. You could see that the number may go up to 13.5% plus, so 26 onwards. The plan is to get back our normal margins to 13.5% by 2023. We'll see that every quarter there will be some gradual improvement in the market profile. And on top of that, we have given clear instructions to our business development note for any projects below threshold margin limits. Because we are not looking for projects for low margin, just to build the order book. Okay, so this is also helping a great extent to add the quality orders and see that margin profile is maintained.
So just a follow-up, so what is the current mix of their old projects? So how much of the order book would still have that old projects with higher royalty payments? And when do we expect this to complete?
It's settled down by FY25, so we could say another 25% to 35% in that range.
Sure, sir. Thank you very much. I have a few more questions, but I'll get back to you.
Yeah.
Thank you. The next question is from the line of Amit Vora. Please go ahead.
Good afternoon, gentlemen. Thanks for taking my question. Congrats on a very good set of numbers. Excuse me, sir, so I'm asking this again. The only thing is that you had mentioned that for completing the NBO project, there might be requirement for you to raise some debt as well, other than the equity that you have raised. So is there a plan to further raise any debt or no?
Yeah. So the first project is 400% for PVC, which is a smaller size. We have already tied up power finance cost of PFC 200 crore, 60 crores, 50 crores, and everything will be done from the SPV. The tie-up is already done. And for the second project, we need to put the infrastructure. On top of that, we need to also build a washery for the landing plant, which is larger in size. So it will be almost like 190 crores plus. So we have raised equity, so we have sufficient equity. Having said that, we have lined up some part from our existing banks. Should we use or not, we'll take a call because the internal system itself showing some surplus cash flow. Therefore, we wanted to use or not, call will take a gradual call. Because the PFC part will use, but the second part, Tasra actually, we'll take a call gradually, sir. We'll take a call, not at least for next 16 months. There will not be any increase of debt in the Tasra project.
Okay, that's great to know. Just one question. Now we are almost 1.5 months in Q3. So what is your estimation on the Pani project? Is there any, you did mention, but I'm just saying because we are already there almost 1.5 months in Q3. What is the status there? Is there any possibility that, what kind of revenue booking can happen there?
Adani, as I stated, like for quarter 3, maybe in the range of 60 to 150 crores, that's the maximum we can do quarter 3. We are working on that. We have spent some money. And out of the total packages, it is quite active. So probably by FY2024, the max, what I'm expecting is 360 crores. That's two packages will be. Probably quarter 45 will see a quarter done.
That's the second half, still you are expecting between 300 to 400 crores. Is that correct estimation?
No, sir. For the entire year of FY2024, I'm expecting in the range of 350 crores. Quarter 3 maybe in the range of 50 to 150 crores.
Okay, and last thing on exports. So order book that you have targeted and you have mentioned 10,000 crores. This includes both domestic exports or it is only the domestic orders?
No, it's possible, sir. Exports, we are not taking a larger target this year. The maximum what we have intended is maybe 200 to 300 crores. Maybe 180 to 200 crores is going the mid-term.
Oh, it's negligible.
25 probably we may need to keep a larger target. But this year we have kept the target.
Understood. Thank you. Thank you so much. All the questions have been answered. All the best.
Thank you, sir.
Thank you. The next question is from the line of Bharani Vijay Kumar from Spark Capital. Please go ahead.
Yeah, good afternoon, sir. So when you were talking about the opportunity from the power sector from the new projects, you mentioned projects worth 5,270 megawatts from revival of projects is also there. So just my question is whether are these projects which have already been announced but were shelved due to various reasons now coming up again?
No, there is only formula. These are all well-regulated, what is it called, under the initiatives which has come and tendered and awarded. For example, JSW has taken their job in Orissa, then Meenakshi at Andhra Pradesh, Vedanta have taken it. And then, now that final rebidding has taken place for the American is going to 650, it is settled between Reliance. Earlier PFC was the L1 and now Reliance has given a better offer. Adani has given a better offer. Now, that way, most of these first phase of the project, what I said about 5,000 megawatts, more or less everything is come up. Now, what I'm trying to say that people will have maybe after jobs, it will have an investment of at least substantial investment, easily about 15 to 20,000 crores overall investments, and then in that we will have a share of 4 to 5,000 crores opportunity size. Now, coming to the second part of these utility projects, government has so elaborated that and saying that state GENCOs and other companies also, state and state can also participate in that. They publish the list of those projects also. That is also coming to substantial about 6,000 megawatts. Once it happens, that will add up to more opportunities. Then that is what has to see. I think government is very firm on this revival only because of the scare that created as the renewal element of the percentage of the power goes up. This can be huge disturbance the grid. They want to avoid that situation anytime in the next 2 years. They want to fill up those costs so that base load operations are well established. Coal-based plants are available for day-night operation when the renewable power cover the bulk of generation and all. So I think we are very clear on that. And that's why we are also seeing that the organization, the setups and the people, what we are having, we are keeping them. And we are focusing on these new projects also in a big way.
Okay, understood. My second question is, so of course you mentioned about the NTPC's new projects and this revival and the NCLT projects another 10,000, but there is no mention of any projects from state GENCOs. Like, why is that the case? Are you seeing any state GENCOs projects also in the pipeline?
Yeah, that is exactly. I think what the government has seen that why state government, for example, private sector is coming up. For example, Adani has taken over, Vedanta has taken over, Reliance also is bidding for a Mech. Then, JSW has taken that Odisha project of the IPP. And then JSL has taken over the Connect. Now, what the government is, they want to enhance the basket of the fund for the bidders, and that's where, I think this guideline has come just 1 month before. I have seen in the website of power industry. It is a clear guideline. It's true, and they want to push these balance projects also. I have got a list of projects required. I can share that website.
Okay, maybe I will get in touch with you to get that project. Actually, my question was regarding state GENCOs, like say TAN GENCO or AP GENCO. These state GENCOs are not coming up.
Yeah, exactly. What you are telling is exactly your job. Yeah, they have been prodded by the government. Please participate.
Oh, you mean, okay. I understand.
Yeah, that is they issued a circular. They issued a specific circular for that.
Yes, sir. I will get in touch with you. Thank you so much.
I will send you that.
Sure. Okay.
Thank you. A reminder to participants that you may press star and 1 to ask questions. There are no further questions. On behalf of Nirmal Bang, that concludes this conference. Thank you for joining us, and you may now disconnect your line.